go. As per normal, guys, we try and provide you as accurate information as possible, and remember to use the stuff that we say here as guidance, but you have to evaluate your own unique situation before dabbling in stocks, because it remains a risky endeavor. Thank you very much for joining us today. We've got Matt Swart, Senior Equity Analyst, with us, and he's going to be talking to us about Harmony Gold, and then we're going to dip into the technicals of it with Shaun, and then we'll take your questions after. If you have questions and they pop up whilst we're talking, please type them in the chat so that we can deal with them straight after. Otherwise, you can just switch on your mic and ask it in person. We thank you for your attendance, and we thank you for giving us your insight. Matt, take it away.
Thanks, Sarel. Yeah, so as Sarel mentioned, I'll be discussing Harmony Gold today. We released a report earlier on in the week, which I'm sure will be made available to you if you requested from Sarel. So in the report, we briefly touched on the results for 2023. But our view from our last report has not changed. In our last report, we issued a sell recommendation, and since then, Harmony has decreased about 20%. And the outperformance of the local gold producers versus the global gold producers has started to narrow. The main takeaways from the 2023 results were as follows. So the production was flat, but grades improved. The rand weakened from the prior year, which boosted revenues and earnings. And then they were able to keep costs relatively low, which is a good result considering the inflationary environment that we've been in. And then on the guidance, guidance on production costs and grades were met, and they provided guidance for the next year. That was a slight miss, and we put that into our valuation model. It led us to decrease the intrinsic value from 60 Rand to 55 Rand. But yeah, our view on Harmony hasn't changed. We'll still keep it as sell for now. This is the chart I was talking about, which shows how the SA gold producers have performed relative to its global peers. And then when we last reported on Harmony, the SA gold producers were at the peak of this chart, which we highlighted as an anomaly. Since then, the price has begun to unwind, but Harmony is still more than double some of the others. And in this chart, Harmony is the darkest blue line. I know it's quite hard to see, but it's the darkest blue line, and it's the highest one out of all of them. And then, yeah, this forms part of one of our main reasons why we bearish on Harmony. So gold is, it has come down a little bit over the last month. It's nearing the $1,800 level, but it's still very high. And this chart shows another anomaly, and that is that compared to history, gold is much higher than what is suggested by real rates. So when you consider this and the other drivers of Harmony, which are exchange rates, at the moment they're very weak and they should strengthen in the short term. You've got production, which is usually asymmetrically skewed because they're unlikely to produce more than what they've guided, but they can produce less, and that can happen if there's any unforeseen interruptions. Costs, which are largely out of their control, and being a predominantly South African producer, the majority of their costs are related to labor, electricity, and there's uniquely South African issues with that. And then, of course, the gold price. And there are reasons to to say that the there is support for gold. A weaker US dollar and maybe increase in safe haven demand. But I don't think it's likely to move materially higher from the current prices. And we just think that the price of gold is asymmetrically skewed. So that forms one of our reasons why we're a bit bearish on Harmony. And then here's our valuation. Given that it's dropped about 20% since our last report, we've changed the weight on our bear case a little bit. So we've upped that, and then we've lowered the weight on our bear case, and we've upped the weight on our bull case. But overall, we think it's still a little bit overvalued. Intrinsic value about 55 Rand, and we would recommend selling it. And then I'll hand over to Shaun before we go to Q&A.
Well, good morning, everybody. Yeah, you can see the chart there. That's obviously until yesterday's closing price of Harmony. So it's trading far below its 21-day and 40-day moving averages. And just testing the 200-day moving average, which is that shorter, call it purple line. So the share price has bounced out of that, what I call the support zone, which was between 66.32 and 70.70. And as I say, now it's testing that the lower end of the 200-day moving average, which is about 72.42. When I saw last this morning, it was trading about 71.20, which is about 30 basis points lower compared to yesterday's close. Saying that should the share price break up above that 200-day moving average, it could move towards that longer-term resistance trend line. That's that descending trend line, which is about 82.33 level, and then possibly to the 85.30 level. You can also see there in the lower part of the chart, the MACD indicator, the oscillator, is trading below the zero line into what we call the oversold territory. But you can also see there's no clear bullish signals, although the other shorter-term indicators like RSI and stochastic have confirmed bullish signals. I'm not very optimistic about the momentum on the stock. As we said, the share is currently trading far above its intrinsic value of 55, and we have as Matt said now, a sell signal or sell recommendation on the stock. So it's not too exciting, and I see the other stocks also, other gold shares also down today. Thanks, Matt.
Yeah, it certainly looks like the gold shares are under pressure. I think Matt's right in that there's scope for a bit more downside. This chart is surprisingly well supported here. So yeah, what Shaun mentioned, that long-term support zone could hold for a while, but we could eventually see the share down back to intrinsic value. If we had to take a dip, Matt, in resource stocks, what would you have in your portfolio if we were to sell our Harmonies?
Is that for gold specifically?
No, I don't think gold specifically. I mean, I suppose we could include the Plats as well. Not too sure about Sibanye, who we firmly believe in, and that was downgraded by Moody's and took another whack. But yeah, any idea? I mean, because
we do like Sibanye. Sibanye's, but they're platinum. All of the platinum producers have been having a terrible time. Fortunately, we have been in. We've got exposure to Sibanye, and that's been the best out of a bad bunch. So if you look at the performance over, the last year, Sibanye has outperformed the rest of them, which is even though the performance is quite bad. Out of the gold ones, I'd probably go for Anglos and Goldfields over Harmony. Harmony's got a lot of exposure in South Africa. So Harmony's got exposure in mostly South Africa, and then it's got a little bit in Papua New Guinea. Whereas the other ones have got, Anglo's got no exposure to South Africa, and Goldfield's got about 12%. So, and for various other reasons.
So no clear trade here, except maybe if this Goldfield share does dip below that 66 level, then we think the intrinsic value will come into play at 55. So be mindful of Matt's sell recommendation, and seeing that we don't have a clear winner in the resources sector that we're punting at the moment, except for our holdings in Siboney, maybe time to sit out with the cash that you normally allocate to the resource stocks. I don't see any questions in the chat.
In the meantime, Sarel, let me just add to that last question about one of the other things which goes against the case for Harmony is like for resources, you want to go for the guys who have got relatively good costs, and Harmony's got their margins are the lowest out of all of them, mainly because they've got underground mines, predominantly underground mines, whereas some of the other ones are more open pit and mechanized mines. So the costs are a lot, the margins are a lot better, and that's a more margin for safety. And out of the three big SA gold producers, Harmony's got the worst margins.
Yeah, Rajesh and Dennis both ask here. They say, is Anglo American an option, or would Anglo Gold be a buy? And I think you've already indicated that it would be Anglo Gold.
Yeah, so you can go for Anglo American to get a more diversified exposure into different commodities, and then Anglo Golds for gold specific.
Okay, great stuff. I don't see any other questions, Matt. It looks like the interest in Harmony or the resources stocks is about the same as the rest of the market. Fairly quiet and down, and everybody's grumpy. So I want to thank you for your time. Thanks for your insight, Matt. Thank you for your chart, Shaun, and showing us how to interpret that. And then we'll see you guys next week. I don't know what next week's stock is, and I won't be able to attend, but I know Vaughan has said that he would host for us. So it'll probably be Vaughan, Shaun, and one of the research analysts will confirm via email. Thanks very much for joining us. Yeah, what do you say, Shaun?
It should be Old Mutual, so it should be Pierre.
Cool. Yeah, should be financial. Great. Okay, So it's Shaun, Vaughan, and Pierre next week with Old Mutual. Thank you very much. I hope you guys have a fabulous Thursday. Cheers.
Thanks, guys. Cheers.